traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. So we have ADP non-farm coming out very shortly. So I've got to get our analysis done for that. Man, this Kiwi is strong. I do not like it at all. Okay, let's go into our analysis. Let's start off with the euro dollar. So here's the euro, and the euro is closing in on 111. Now, 111, Paul said 111.05. I have 111.08, which is a 50% retracement. And that seems like a very doable level, because if you look at the lows here, the low right here was 111.03. So I would assume that the 111, I'm going to call it 111.10. You have to compensate for a little bit of a breach above resistance. You know, like let's say the number comes in a little weaker, we pop up below or pop up above 111, take out some stops before moving lower. You know, just to breach those stops. That's possible. I'm going to put us back into a range right now. We've been bearish for quite some time. Actually, you know what? While we're below this channel low, I have to keep it bearish. That channel low, or that channel comes in at 112. So I've kind of got to keep it there bearish while we're below that 112 level. But anyway, we're currently, as you can see, we're retracing. It's been a very strong retracement. It has gone further than I thought it was going to go. I thought we'd peak around this 110 40 level, and my cost average is 110.60, so 61. So I'm just kind of sitting in it right now, but I don't like how the dollar is just continuously pulling back. I mean, it's been a pretty strong move here. The support for the euro dollar, and we finished this flag and then kept going. Okay, at this point in time, this 110.50 is going to be support. And while we're above, actually 110, I'm going to call it 110.40. While we're above 110.40, anybody who's bullish the euro dollar is really not worried about it. You know, if they picked it up throughout this move higher, there's really no worries until you drop back below 110.40. You get below 110.40, and I think it gives reason for bulls to get a little concerned. They probably got their stops nestled somewhere below the 110.40. All right, let's talk about the cable. So the pound continues to move higher. Now we're closing in on the 123.25 level, and this is really key resistance for bulls right here. That is the post flash crash drop, 618 retracement. We've had a difficult time getting above it. We haven't been able to get above it since the second week of October. So that resistance is 123.25. If we can get above that, the pound should squeeze to 124. So 123.25, that is resistance. And the pound's playing catch up. I mean, the pound, I'll tell you, the pound's really been kind of underperforming. But just over the course of the last, I know there's been some comments from some Bank of England members, but I mean, we just started really playing catch up here over the last couple hours, so you can see that the pound's making that move. Support for the cable right now, I think, is pretty simple. It's going to be right through here. So that'll be 122, basically 122 is support. Okay. And it's still in a bearish trend. Now remember, we can go with the pound dollar. We can go all the way to, in my opinion, we can go all the way to 128 and still be bearish. I mean, we're in a very bearish trend. We're just currently retracing in that bearish trend, which is taking a little bit of the pressure off, but still ultimately, I mean, if you look at the downtrend, it's not pretty. Um, all right, let's go into the Swissy. So the Swissy came right to really key support as far as I'm concerned. We've got to basically hold here in the Swissy. Okay. Now let's get rid of this channel. Okay. The Swissy, I thought was going to hold here at 98 cents, and this is where I've got my cost average, which, you know, I'm sitting here thinking, okay, well, my stops are lower than where we're currently at, but I'm like, okay, we can't drop and breach this trend line. There's no way, and so, but I didn't think we'd get as far down as we've gotten thus far. But this is going to be, you got a 618 retracement. We're kind of probing below here right now. There's a 786 that comes up at the same spot, and you can see that all comes in at 97.15. Okay, we've been as low as 96.94. Did we really spike down there? No. Hold on. Let me take a look at that. 96.94. I guess we did. Wow. All right. So that basically, I'm going to write down 96.95. Okay. That low has got to hold for the Swissy. Now, because if we break below that, that means we're breaking through that fib confluence. It's broken. Now, in order for this thing to squeeze from here, we have to get back above 97.60. Okay, I'm going to take this thing out from being bullish. We're back into that range because we broke back below that channel. Okay, so 97.60 is resistance right now. Okay, and that'll take that downside pressure off, and it's been obviously some very severe, downside pressure as of late. All right, let's go take a look at the dollar yen. So I got out of my yen pairs yesterday. I took my euro yen off the table. I bought some Aussie yen and I took that off the table really quick. I took like a 30 pip loss and I said, no, I'm not even dealing with the yen. There's too much risk aversion at the time, and the dollar yen has really come down. Now we are at, if you go to the lows that we set back here in September, we're at a 38% retracement. The 50% retracement, and this is where we noted on many occasions the 102.80. This is going to be really key support for bulls, in my opinion. We can get there. We can, we can get down here. I think it is possible. But I think it's going to have more to do with bonds. And I think if bonds have been in rally mode since yesterday afternoon. So if bonds start to pull back a little bit, and yields rally, we might be able to find some support down here. But some horizontal support through here. That comes in at 103, basically 103.15. And then I'm going to write down 102.80. Just in case we have a weak number, we might see those levels. So 102.80, 103.15. I mean, it's been a pretty big move lower in the dollar yen. So those are doable. Now, resistance on any rally is going to be right there, because you can see how we probe below here. We probe below 104, we pop back up. Everybody thought the sell-off was over. Then we took another leg lower. So 104 is going to be resistance on the way back. Okay. And we're in a range. We have not been able to get out of the range. Dollar Canadian. The only thing that's keeping up the dollar Canadian right now is weak crude oil. And crude, by the way, is trading below 46 bucks. We do have crude oil inventories coming out today, but you know, the weakness of the dollar may eventually weigh on the dollar Canadian. I think at this point in time, you have to look at the dollar Canadian being pretty well supported at 133. Okay. And then obviously resistance here, 134.33. So I'll just write 35. We're bullish while we're above 133. You know, it's still making its way higher. Keep in mind, crude's weak. Okay, crude is. Wow, look at the pound. Pound's flying. Pound pushed higher to new highs. Really getting a nice little leg up here in the pound. Okay. Kiwi. This Kiwi has been relentlessly strong following the employment data last night. Now the employment data was strong. It's been a real thorn in my side because it pushed the Aussie New Zealand down close to my stops too, because my stops are below 105, which I'm obviously a little bummed out about. That's one thing that, you know, when I got up this morning, I looked at the quotes and I'm like, damn it, I got to go make sure I manage that that Aussie New Zealand. But you can see the Kiwi dollar, we've rallied past resistance here. We have the underside of this trend line here that may come into play also as 618. It all comes in around 73 cents. So 72, I'm going to write down 73 cents. It's also 261% extension of this move. 73 cents is going to be key resistance today, and we may tag it. The way that the Kiwi dollar is acting today, I think we can, you know, make our way up there. I'm going to put us in. I'm going to take us out of the being in such a, you know, a bearish state into a range, because really, if you look at, you know, if you look at the channel, we're still in a, you know, we're still in the channel. We're in the middle of the channel. The head and shoulder pattern really didn't, you know, follow through to its completion, which have been, you know, I mean, I think it should have went to 69.50, and it stopped ahead of 70 cents. So I'm going to put us in a range for now. Although I still want to play it to the short side. I've got a short in the Kiwi right now. I don't like it. I'm upside down in it, but you know, I still like playing it to the short side. I think you just have to be a little bit more careful. I think we're obviously in a pretty big range. Now for today, since we had such a bullish move out of the from this employment data, this trend line support here, let's go over to well, we can keep it on an hourly, it'll be fine. While we're above 72.50 today, it's bullish intraday. We have to break back below 72.50 to take this downside pressure off. Okay, it's 30 pips away, but you know, like I said, the Kiwi is holding up very, very well at this point. All right, I'm going to do the Aussie for you really fast. I'm trying to get this done before the ADP non-farm guys. So here's the Aussie. Aussie's moving up due to the just the Kiwis, doing better, gold's doing better. So we're just seeing a rally in these commodities. But we're still in that apex. So I think any rally right now towards 77 cents is going to be, resistance, and then obviously at 76.10 is support. And you just kind of got to, be you gotta be careful while we're in the apex of all of this. This triangle, huge triangle, and we're still in that range. Okay, pound new highs. Pound's just screaming higher. Right into resistance. Aussie new highs. Shoot. All right, guys. Hey, I'm going to put you on hold for just a few minutes. When I come back, we're going to finish up the rest of these. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. The Aussie's at highs, the Euro's at highs. We're going to probably, I'm assuming ahead of ADP, we're going to take out the stops above 111 in the euro dollar. Now, one of the other things to keep in mind, that even if the ADP number comes in a little light, any type of dollar sell-off from here, it's probably going to be somewhat muted. It might just be like a stab lower because the dollar's been under such pressure, that there's probably going to be, again, if it's a little bit of selling, it'll probably just be met with some short covering. Anybody who's short the dollar right now is going to use a weak ADP number as an opportunity to cover up dollar shorts, in my opinion. All right, now speaking of which, let's go over to the let's go over to the dollar index. Okay, so here's the dollar index, and you can see the dollar index is slumped to new lows. We have the 50% retracement that comes in down here. The 38% retracement we are below. We're obviously very oversold. Relative strength is divergent, all that jazz. But that doesn't mean we can't go any further. What I probably think we should do from here is we should take a fib extension from probably this point where we consolidated. 127% extension comes in at 97.20, and which is also here. Let me grab this red line right through here. That's not what I want to do. Hold on, let me delete that. Right here. So this 97.20, that dotted line, will probably offer some support. And the reason why I say that is because it's 127% extension of the breakout. Okay. Even with a weak number, we might slump a little bit, but then probably bounce from there. Like I said, if we get a weak ADP number, it's you're going to find buyers down there. So that comes in at 97. Let's call it 97.20. Okay, resistance now. Here, let's get rid of this. I'm going to take this line here. We don't need this for now. While we trade below 97.80, that's the only thing that's going to take any downside pressure off the dollar, is if we rally past 97.80, which I don't see as really being the case today. We may recover a little bit in the dollar, but I don't see us. We're going to go back into the range since we dipped below the breakout point. I don't see, even we may rally, any rally is going to be met with sellers. Any significant rally over the next 24 hours, you're going to find people that are like, oh, thank God, just get me out of the dollar here. Okay. And remember, we're in the middle now. We're smack dab in the middle of our channel. Okay, it's been a really significant rally. 50% retracements coming into play. Okay, and now we're in the middle of this up channel where it gets really choppy from here. Okay, let's go over to the peso. All right, here's the peso. Let's get over there. Peso hit the 618 retracement. There's a 618 retracement. We filled the gap here. Now that we've gotten now that the equity markets are starting to stabilize, okay, the peso may also stabilize a little bit. We have 55 minutes left in this 4-hour candle. If this candle turns red or turns a little bit lower, we're probably going to start retracement. I mean, the peso's down over 3% in just a few days. It's been a really, really big move. It's been the big Trump pull swing move. That's what's created this whole since Friday. Friday right here, and actually it's been probably about a 5% move, all in all. So it's been a real big swing in the peso. Now the issue will be is if we stall here at the 618 and we close back below this area where we fill the gap. Because if you remember, like my analysis over the last couple of days, I said, well, before the election, I think we'll get up to 1936. And the crazy thing is I was long the U.S. dollar Mexican peso yesterday at 1890. I was long right here. I was long at 1890. I think I sold it at like 1899 or something, or 97. I made just this little bit here. I did not expect this big of a move. All right, so from here, 1942 is going to be resistance, support at this point. And by the way, the U.S. dollar Mexican peso is not on the U.S. dollar program. It's completely going opposite of the U.S. dollar right now. This is all about the polls and about Donald Trump, and that's all this is right now. Okay, so support is 1924, resistance 1942. $19.24, 19.42, and if Donald Trump the polls continue to show that Donald Trump is pulling ahead in the polls, we can take out this resistance. Okay, it's possible. Okay, Norwegian krona. So we broke, well, actually, you know what? Let's stop here for a second, because what we're doing is we're testing. You see this old trend line here? Let me move that down just a bit. Here's this old trend line. And I'm going to get rid of this flag because that flag didn't play out. Let me just get rid of that. Okay. So here we are with the US dollar and Norwegian krona. And we're testing this trend line. Now, personally, I think the US dollar and Norwegian krona can come down further, especially if crude oil bounces today. Remember, we have crude oil inventories. So I think there's a good chance that we can come back and test these spike lows are 811, 812. I think that's possible. Resistance. Well, resistance is easy. It's right there. Let's get rid of this. 822. We're in a range. Okay, let's go over to the US dollar Swedish krona. Now the US dollar Swedish krona, it's coming back to its big breakout point. Its big breakout point is right here. Let's go out to the daily chart. Big breakout point is at 887. Okay, that is a place where, and I have a little US dollar Swedish krona. I picked up some yesterday here at 893, I think. So I own a little bit, but I'd like to actually buy more down here at 880, 887. Okay. Resistance for the Swedish krona now will be at 9. That was support here. So that's going to be resistance on the way back up. Be back at 9. Okay, here's your bias chart's done. This is still bullish. Your bias chart's done. Go ahead and take a picture of that. Let me go ahead and take some questions. All right, let's see where we at.